Welcome back to another episode of Namdar Unfiltered. I'm here today with Lachlan Parker from Shaw Financial, and we're going to talk about upsizes and what you can buy across Sydney if you're looking to upgrade your home and buy that dream family home in Sydney. Lachlan, great to have you, mate.
Thanks for having me.
Lachlan, can you give us a little bit of intro who you are? Obviously, some people may know, some people may not.
Sure.
Give us a quick background.
Mortgage broker. I work at Shaw Financial. We're based in North Sydney. Been a broker for 5.5 years now. I love working with first home buyers and upsizers. So, yeah, looking forward to the chat today.
Yeah, perfect. So, as Lachlan may have said, he's from Shaw Financial, their mortgage broking company, one of the biggest in the country, one of the biggest in Sydney, do a lot of business in the area. And I thought it was a great guest to have on to talk about upsizes, which I know they see a bit of as well. Yeah. But I guess for yourself, Lachlan, what are you seeing in terms of upsizes when you do deal with them? Like, I guess if you can say a percentage of what your clientele is like that, but also what do they look like? What's their sort of age group, income? Where are they buying?
Yeah, I think it's kind of, we talked before, I do a lot of first home buyers, but now people trying to get to that next phase of life. They might have bought by themselves before, they've partnered up or they've had their first or second kid. So people that might have bought as a couple together or one of the partners have bought previously, and they're trying to upsize when they've started a family. Incomes may have increased and they might have got in kind of previously with a lower deposit and now, looking to buy that nice dream home.
Nice. And in what price points are you sort of seeing them typically transact at? Obviously, it won't be less 900K million. Probably, I don't know, is it 1.42 million? What are you seeing?
It varies a lot, I think, depending on kind of where they're buying. I do a lot on the kind of lower North Shore and upper North Shore and kind of seeing people going from those 1 or 2 bed units that they might have started with and then they're trying to buy those dream homes and they might not always stay lower North Shore. They kind of might vary a little bit, kind of moving towards kind of the hills. I know a few people move to, or kind of moving towards the beaches and different areas. But yeah, kind of maybe if they've started in kind of that unit price around a 1.1 to 1.5 and they might be upsized in that kind of 2 to 3 million range.
Okay. And talking about the $2 million range, what
Sure.
sort of income does someone roughly need? Obviously, you need to know the financials and everything, but
Sure.
like rough guideline, if you're buying $2 million or, around that range, what type of income do you need to service?
Depending on kids and liabilities, I kind of say as a rough rule, you're kind of borrowing kind of 4.5 to 5 times the income. Is kind of like a nice little guideline. It will vary depending kind of on the majors and kind of second and third tier lenders.
Mm-hmm.
We do see a bit of variance and kind of, what their liabilities are. But like I say, 4.5 to 5 is kind of a nice little range to play with to start with on a rough figure.
Okay, perfect. And, with these upsizes, a lot has happened right in the last sort of 3 to 6 months,
Sure.
especially not just because of the federal budget and all that stuff,
Yep.
but, interest rates have increased since December of last year.
Yeah.
How have you seen, I guess, the upsizer behavior change? Like from my side, I've seen upsizers in the current market a bit more hesitant now sometimes, or they're finding it harder to sell their home.
Yes.
So they can't obviously buy. What are you seeing?
Yeah, I actually think it's a good time for upsizers. I think if you're looking at a market and let's say it's the corrected market, say you've got $1 million property and let's say it's dropping 5%. So we're taking a 50 grand haircut on the property, just for numbers. If you're upsizing to that kind of $2 million property and we're still getting that haircut of 5%, you're getting a bigger discount on the upsizer. So I think it's a good opportunity for those that can afford it. Obviously to make repayments and look at the cost of kind of other things with stamp duty, etc., and moving properties. I think great opportunity for those looking to upsize.
I think that's actually a really, really good point you just said there. A lot of people think, the market's going, I'm stuffed, I'm not going to upsize. Well, it's actually no. Because if typically when you're upsizing, you're paying more, right?
Correct.
So if you're upsizing from, let's say, from a $1.2, $1.4 million home, the market decreasing is a lot slower at that rate than it is at the $2.2 million mark.
Sure.
So you're going to get a bigger discount or be better off if you sell now or soon and then go and buy that dream home that you wanted, right?
If the market's the same, if you're getting the same kind of discounts, not saying they are, but if you're getting the same discounts on both properties, great time.
Of course. And with these, upsizes you mentioned, right? Typically they're first home buyers, maybe they bought a second apartment or whatever it might be. If they bought their first place, maybe they had a 5-10% deposit or 15, whatever it is, or 20. But what are you seeing now? Are they buying more with 20% deposits, 10%? What sort of deposits are they playing with?
Yeah, I kind of don't see a lot of the 5% or anything really. Not a whole lot of LMI deals when they're upsizing. Kind of see that 20%. People have had a bit of time. They've been paying off the debt, saving some money, and they might have invested elsewhere over those times. Obviously, they kind of had a bit of time and might have been kind of shares that they liquidate. Generally, I'm seeing that kind of 20% deposit more. Not saying I don't see the 10%. So I've done a few of those recently, and people say, hey, we're willing to pay the higher rate to upsize and get into the market to upsize. And then, of course, we can do that. And once they get a bit more value in the property, a bit more equity, then we refinance to 80% rate.
Okay. And are you seeing upsizes sort of overcommit sometimes now, like in the market, or like with what sort of budget they're playing with, or?
No, I think people got to be cautious. Yes, they want to upsize. We're going to make sure it's the right time. Can they afford the repayments if they're going to upsize on that property? There's going to be extra costs generally if you're going from, yes, you won't have strata, but if we're saying you're going from a house to another house, there's going to be bigger upkeep on that property generally. So yeah, other things, kind of insurance might be more expensive. So it's not just the repayments. You got to look at the lifestyle creep on that as well when you're going from a 2-bed to a 3-bed, etc. as well. So I don't think people are overcapitalizing, but I think they're just going to be cautious on how much it's going to cost them extra, not just the repayments.
Look, that's actually a good point, and goes into my next question is, what's the most common sort of miscalculation you see upsizers make when they're trying to either calculate buying their next home?
Yeah, I think you just got to factor in some other things. So if you're going from that 1.4 to the 2.2, it's just not an 800K difference. We've got to look at the selling cost of that property. So if we're factoring, let's call it 2% on that 1.4, kind of 28 to 30 grand. Got to look at stamp duty on that property for the 2.2. So that 800K is going kind of well above now. So if we're looking at a 2.2 purchase, probably looking at about 100,000 on the stamp duty. All of a sudden, that 800 is going to about 930. So other things, legal fees, etc. And as I said, yeah, the other upkeep, furniture as well. If you're upsizing, you got another room to decorate, and yeah, other things like that. So yeah, a few things to factor in just besides the difference on the properties.
Yeah, of course. And I guess one of the things to factor is also, when you're moving, do you sell first, or do you do the bridging finance?
Yep.
In your, I guess, situation, what are you seeing more, and is there one that you lean towards versus bridging finance versus selling first?
Yeah, I think people like to explore bridging and find out what it is. Generally, it's quite costly. People kind of, I'll give them the figures, show them what it's going to be on the interest capitalized generally on that property. Holding both properties, holding the debt from the existing one as well as the new one. Banks will generally give you 12 months interest on that. We'll run those numbers, and most often than not, people say, hey, I've got to sell first, then upsize, or they'll sell with an extended settlement. We'll go over one of those deals in a while and say why it's not always the best scenario. But generally, people will try and sell first, have an extended settlement, buy in that time. But if people found that dream property and they're trying to go in straight away, that they're trying to buy it, and bridging's the only option if they haven't sold, can always accommodate those things. But yeah, generally I like to say people try and sell first, extended settlement and purchase, other than trying to rent in between as well.
Of course, no, of course. And I guess in terms of your side, what are you seeing in terms of, simultaneous settlement? Is that, like, obviously a lot of people try and do that. Like, have you seen instances where it's gone wrong?
Yeah, had a deal referred to me by a real estate agent. It was a triple simultaneous settlement. They actually called me up a minute before Melbourne Cup was starting and said, hey, I got a deal about to fall over. I need your help. 2 other families, my sellers are supposed to move out to Northern Beaches, and someone's supposed to move in, and they bought with a 6-month settlement. Told us that they'd had all their finance sorted, and they didn't. And it got to a week out, and they hadn't told them they still hadn't had finance arranged. And called up the guy and said, hey, mate, I'm willing to help you, but you got to get some documents to me pretty quick. And he said he had a backup plan, so he didn't need me in the end. But yeah, there are some tricky situations, not just for one party. You got to think of all the people trying to sell, and this one, 3 parties getting stuck on the one guy.
Would you say that's probably one of your upsize deals that maybe almost didn't happen, or?
No, that wasn't one of mine in the end. So he referred to me and called them. I had an upsizer. I won't give any names or kind of location or anything, but someone, this market thought they were going to sell pretty quickly, and they bought with a 4-month settlement. You'd think plenty of time. Bought an upsizer, and couldn't sell their property as quickly as what they thought, and had to take a bit of a haircut on it. And it took a couple months to sell. They end up selling and having kind of a 2-week bridging period in that. In the end, they really wanted to avoid bridging. Luckily for them, they could service both debts, so we didn't actually have bridging finance, but they kept 2 properties for 2 weeks, and had to get a lot of things done by the lender to help us out in that deal to make the deal work. And luckily, I had a great BD and some connections for him to say, yes, we're able to accept this and this and get the deal over the line. Probably something we wouldn't get normally with those lenders. Just accepting different types of income and getting it across the line, and LVRs, high loan amounts and stuff like that. But that was a tricky one. A lot of work done, a lot of hours, but great result for the client in the end.
I'm sure that kept you up at night.
A few for me and the BDM. The BDM was on my house. We're going to get this one done. I said, mate, it's in the works. But,
wow.
We got there.
Wow. Well, in terms of, I guess, markets, like, you have your clients maybe buying the North Shore, maybe a bit further out depending on the budget.
Sure.
But on my side, I did want to talk about it as well, so the viewers can see what first time buyers are getting in the area in the area. And typically you have sort of two parts, right? You either go for more land, which then you have to go obviously further out from the city.
Yeah.
Or you buy a home, but probably less land, maybe 400 square meters or sort of around that range, right?
Sure.
Whereas if you go further out, you get 5, 6, 7, 800 square meters, 1,000 square meters, things like that.
Yeah, huge.
Now, I do want to talk about a few different markets. The first one, this market that I want to talk about for upsizes, I think, even first-time buyers can enter this market, but I think it's a hidden gem of Western Sydney.
Yeah.
Now, yes, it's Western Sydney, but I think it's a hidden gem, especially for the price point, right?
Perfect.
Now, Kings Park, right now, sort of the median price is typical price at about 1.34 million, right?
Okay.
You can get deals below that and obviously some deals above that, but it's a great market. It's actually grown by about 26% over the last 3 years as well.
Okay.
Some decent growth as well,
great
right?
growth.
Yeah, so it's a good market. Now, I think it's a hidden gem because it's like the suburb of North Rocks. If people don't know where North Rocks is, it's just off Parramatta. Great area. Houses there about 1.8, 1.9-ish million.
Yep.
It's like that, but you're in the Blacktown LGA. It's like the first suburb of Blacktown if you're going towards it.
Okay.
But it's a hidden pocket. Like it's not connected to Blacktown. You got to go off the main road into it, and you're like in this little enclave of location.
Yeah.
And it's obviously $600,000 less than North Rock.
Sure.
So you're paying a lot less money to get a beautiful home. Or a great home where then you can build your dream home and be in an area where a lot of downsizes, a lot of sort of older sort of homeowners are now downsizing. They're selling out.
Yep.
And you're getting a lot more young families and young couples come in to upgrade these homes or knock down these homes and build beautiful new homes. I've seen some nice homes in these areas be built, curved walls and all that stuff, or homes that kept, but they render them or they renovate them and make them look really nice, right? I think that is a great suburb. And the beauty of it is as well, yes, you're further out from the city, but you're close to the M7, like the highways.
Yeah.
We've got the Marion train station next door. If you don't want to take the train station, you've got the Bella Vista Metro about 10-minute drive away.
Perfect.
So it's still in close proximity to everything in terms of public transport, and you're in a pretty central location. So if you want to go into the city, you can. If you want to go out west in the Blue Mountains, you can. If you want to go up north to the Hawkesbury, you can, right? Okay. It's a great spot. And I think if you're upsizing or you're looking to buy your first or dream home, it's a great market to look into, especially when I talk about these other locations. These are all going to be areas that are much more expensive.
Yeah.
But at 1,314, like, I think it's a no-brainer if you're at that price point. It's somewhere to look into, and it's not a lot of homes coming up for sale. It's a smaller suburb. Okay. Very owner-occupied dominant. Very owner-occupied. So not
hidden gem.
Yeah, definitely hidden gem.
Sounds good.
Now, in terms of if you want to buy that home that is massive and you want to be in more of an affluent area as well, like Kings Park is changing, but it's not as affluent as some of these other areas. The Hills District and also the Sutherland Shire, yes, they're on different sort of sides of the city. But those markets, you're getting some good properties around that $1.5, $2 million mark, and obviously $2 to $2.2 million mark. Obviously, the more you go, there's more to buy. Yeah. But there's some good options there. You're getting some decent land, you're getting some nice homes, and you can sort of settle down in these areas. They're affluent, they have great lifestyle, great people around there, great schools, and you can raise your kids and basically grow old.
The Hills.
Right?
We both know the Hills pretty well. Great area.
So,
I grew up there myself.
So it's a great area, right? Yeah. I live in the Hills now myself, and we've got family here, so it's a good area. Yeah. And I think if you're looking to build, your family and have a long-term home, great area to upsize to. Obviously, there's pockets within these areas that you want to go into, but some great options, right? Nice. Now, look, if you're like Arian, that's great, but I don't want to be an hour out of the city. Sure. Maybe I want to be, a bit closer in, half an hour, 40 or sooner, a bit closer. That's where you're sort of compromising a bit on land. Okay. You can look in areas like Bexley and Roselands, right? They do come up. They are more premium as well. You're probably looking at about that 1.9 or 2.25 mark. Okay. And a majority of these homes, as I mentioned before when we talked about locations, is a majority of these homes are below sort of that 500 square meter mark. So you're not getting as much land. But if that's not an issue, you want maybe something more low maintenance, maybe you want a duplex or whatever it is, or it's just a smaller home. Yeah. Could be something, then you can obviously turn that into your dream home, but just be mindful of that. That's kind of what you're sacrificing if you're upsizing, right? From a unit to a house. That's what you're looking at, right? Okay. If you want a house where you can upgrade, make it a dream home, 5-bedroom, whatever it is, Kings Park is great. Or if you just want a house that's 5-bedroom that you don't want to expand onto, but you can renovate maybe or it's done up, then obviously the Hills, Sutherland Shire. Cool. And obviously if you want to just proximity to the CBD, like I want to be close, that area that I talked about before in Bexley and Roselands, that's what you're looking at, right? Now, again, it's not the eastern suburbs. It's not the lower north shore. As we know, you're not going to get in there.
Not a whole lot.
Not there, but that's some markets, right? If you now want to go into the more premium markets, then obviously at a bare minimum, you need a 3 handle to get into those. Okay. I think into the lower north shore, upper north shore area, like you at least need 3 plus. The markets are changing, so maybe, in a little bit, you can get you in there.
Units, maybe townhouses, maybe.
Yeah.
You know better, but
No, look, absolutely. Like, I think 3.5, 4 million is what you need to get into that area. Like, because you see units and townhouses sell for the high 2, low 3s, depending on where you're buying.
Yep.
So, that's markets that you can go into, but not a house.
Okay.
It's very difficult to get a house as an upsizer, right? Now, I do want to do a little exercise as well for people because, everyone's like, they think they're sacrificing because maybe they're not buying in, let's just say Coleroy, but, they can buy in Narrabeen, for example, right? Or whatever it might be. Like, I want to be closer to somewhere. It's like, guys, it's okay to buy one suburb over.
Yeah.
It could actually save you a few $100,000. And I want to talk about some areas, right? So one area I want to talk about, obviously we had, the Southern Shire we talked about. I want to talk about Cronulla and Woolloomooloo, which Cronulla is a $705,000 more expensive.
Okay.
But it's one suburb over.
Yeah.
It's one suburb difference, right? But it's $705,000 more expensive. Cronulla, you're looking at about, again, these are median right prices.
Yeah.
You're looking at about 3.25 million. Right?
Yeah.
Woolloomooloo, you're looking at about 2.545 million.
Yeah. Huge.
Huge difference. Yeah. But it's one suburb over, right?
Yeah.
And the biggest thing is all in the 3 years, right? Cronulla has only grown by roughly 2.5%.
Yes.
While Woolloomooloo has only grown by, or not only, sorry, but has grown by roughly 21.9%.
Okay. Huge. And we see that with different suburbs. You have a look at Redfern, gentrification, things grow, right?
Mate, it's just, but it's like one suburb. Oh, no, I don't want to get. It doesn't change it.
Yeah.
It's still a great suburb. And it's obviously changed. Like you said, gentrification happens. Like these things happen, right? But it's just so interesting. Like that's a massive price disparity in median prices. Obviously, exact houses will vary, right?
Yep.
But from a suburb median, that's huge difference, right? Now, I want to talk about also Oatley to Peakhurst, right?
Okay.
Sort of a different area.
Yep.
Now, the gap here, so Oatley is about 2.594 million, right?
Okay.
Peakhurst is about 1.69 million.
Yep.
That's a $904,000 difference.
Yeah.
Right? Now, both of these markets have grown about 26 to 32% respectively. So they're both grown decently.
Yep.
But still, one suburb over, 900K difference,
Yeah.
right? It's massive, right? So I think that's really important to think about. And, if we talk about the Hills area, for example, Casa Hill is big, but another big one is Bella Vista because we talk about Bella Vista Metro, right? Bella Vista, typically you're looking at about 2.7 million, roughly, thereabouts, right? Borkham Hills, which is sort of that first suburb of the Hills, which is a good suburb, it's got, good school catchments, it's about 1.9.
Really? Okay.
So you're looking at about an $812,000 difference. You're in the same LGA.
Yeah. Right.
Obviously, one's Bella Vista, one's Borkham Hills, but same lifestyle, same affluency.
5 minutes from each other.
Yeah, like absolutely. I find that absolutely crazy that people like, oh my God, I need to buy in Bella Vista. Borkham Hills is a great option as well. And you can get probably more land size, older home, and change it into the home that you want. Because Bella Vista does have a bit more, not newer homes, but homes that were built, in the 2000s.
I actually have had a couple clients upsize and move actually out to Borkham Hills.
It's a
great
great
area.
12
months. Yeah.
It's a beautiful area. Tree-lined streets as well. And what I also want to talk about is, I mentioned at the start, is like Narrabeen, right? Versus, for example, Cromer. Like Narrabeen, 2.9 million, right? Roughly, thereabouts. Yeah. Cromer, you're looking at about 2.46. So that's about, $465,000 difference.
Yeah.
Which I find is crazy. Again, you're one suburb over.
Yep.
Even if it's two, like it's not really an end of the world kind of thing, right? But you're one suburb over, right? And that is just the nuance that most people don't realize is I want to buy in Cronulla, or I want to buy in, Cameron, wherever it is. Like I want to buy in Cronulla. Like I want to buy in Bella Vista. Like, guys, just go one suburb over.
Yeah.
And you could be saving yourself.
Expand your search a little bit.
Yeah.
Don't have to be so set on one suburb.
Yeah, because sometimes, how can I improve my borrowing capacity? Maybe it's your borrowing capacity is fine and is what it is. You just need to go 1 or 2 suburbs over. You'll get that same lifestyle, that same experience, and you're going to be spending hundreds of thousands of dollars less.
Get the amount of bedrooms you want.
Yeah, honestly. And it's just like, wow, I don't think a lot of people realize that. And look, in the current market as well, we are seeing a few suburbs that are sort of lagging and you're getting some good discounts, right? And when I say lagging, it's like the days on markets have kind of gone up maybe, right?
Okay.
Which is obviously a great buying opportunity. Now, I won't talk about it here, but if, audience is interested, I'll do another video maybe the next time if we jump on as well.
Yeah, sounds good.
We'll do a video on like the 5 to 10 suburbs we're seeing where they're kind of lagging and you're having the best opportunity to negotiate for yourself.
Okay.
So not just the price difference from suburb to suburb, but these suburbs are actually now sort of slowing down because of the prices, and you can maybe get in and get a really good discount, maybe 5, 10% or 20% below what the market was, right?
Perfect.
If people are interested, comment it down below. We'll do a video on that for sure. But I think that's a pretty interesting thing to talk about. And I think for buyers that are looking at it as upsizes, if you're looking at it, looking at that one suburb over is something that you can do that will help you understand, hey, I can buy it now, I can sell and upgrade, and I can get that dream home and get to live in a lifestyle that I want to live into.
Yeah. Not everyone's upgrading to the same suburb where they are now, realistically.
Oh, 100%. And I think, look, the biggest thing is whether look, if you're on the market, you're on the market now. Just make sure you're speaking to a broker. I understand what your borrowing capacity could roughly be, right? You can run some rough numbers, some scenarios, and then once it sells, then you know what you're doing. But if you haven't already, speak to your broker, right? Speak to your broker, and definitely speak to a real estate agent. Like, yes, you may not trust real estate agents. Maybe get a few out there, right?
Yeah.
And just see what the numbers are. Then speak to your broker, see what you can actually borrow, because you need to understand what the numbers are before you do anything.
Yeah. And also I think looking at the market as well, if you're getting told a real estate agent it's worth this much and properties are selling this quick, do some research. Look on Domain, look on realestate.com. Are they selling that quickly? What are the auction clearance rates? If I put mine in the market now and I have an extended settlement, am I going to be able to sell my property? Because you don't want to be in that loophole where we've seen before, people aren't able to sell, and then they go like, well, we're stuck with bridging. It's going to cost us tens of thousands more. We can dial in those figures for you and see what bridging is going to look like. But if you're set against it or we can't do it because of valuations and equity in the property, and there are restrictions on that, I should say, look at those figures. Not just take one real estate agent's advice, because obviously their job is to sell and get the listing. Don't always just take their advice.
Oh, look, absolutely.
There are some great agents out there.
I was going to say, I've got
not saying they're bad at all, but you want to do some research. Of
course. I've got some good agent mates, but
of course,
look, I think the biggest thing is you want to do your research.
Yeah.
And look, if you're like, I don't know what to do, reach out to us, right? We're happy to give you some advice on what it might be, or point you towards the right agents in the areas that you're looking to target and sell into, right? But the biggest thing is, I think the safest option, look, bridging is bridging, right? If you need to do it, you need to do it. Safest option is to sell first. Sell your property and then buy. Just make sure you do a good settlement for yourself. But if you're also realizing with your agent, speak to them throughout the campaign. Hey, I really think it's going to set up, it's going to sort of end up in this range. Okay, great. Then engage your broker. Hey, now I'm going to maybe start looking and just sort of seeing what's happening in the landscape. Because also you don't want to sell and maybe, move as well. Because if you settle and you have to move again, or, if you can sort of stay with family, that can help. But also don't want to move twice. Yeah. That could be a bit of a pain.
Costly, not effective,
Yeah, absolutely. But that's the biggest thing. Once this episode ends, if you're already on the market, just double check with your broker, speak with your agent, see what you can actually sell for, then see what you can borrow. If you're not on the market yet, speak with a broker, get some agents around your place, see what you can sell for, see what you can borrow, and then from there, make a plan to actually buy and obviously sell. And of course, look at markets outside of maybe where you're considering. Maybe one suburb over, like we talked about, could save you $400,000, $900,000, but you still get that same lifestyle. That's the biggest thing. Lachlan, mate, thank you so much. Mate. How can the people contact you?
Yeah, thanks so much. Yeah, Lachlan Parker at shorefinancial.com.au. On Instagram, lachlan.shorefinancial. We'll say, like, if you want to look at properties as well, we can also do some, or check what yours is going to sell for. We can do some property reports free of charge. So if you want to find out kind of properties looking at or things like that, it can help with that.
I was going to say, that's a good point.
So, yeah.
I'll put
obviously you got people can help with this, but yeah.
No, I love that. Well, what I'll do is I'll put obviously our details in the description of the video and all that stuff. But also I think what's really important is if you have any questions or if you want to help with anything, just put in the comments down below and we'll reply. And if there's anything obviously that I can help with, I'll help with. If there's anything Lachlan can help with, we'll help you guys together.
Done.
Awesome.
Thanks so much.
Thank you guys. Appreciate it.
Appreciate it. Cheers.